Welcome to this week's Weekly Market Roundup, brought to you by Nebraska soybean farmers and the checkoff through the Nebraska Soybean Board. I am Steve White. Joining us on the program today, we've got a couple of great guests joining us. We've got Kyle Bumstead and Heather Ramsey who are joining us on the program today. This is the Weekly Market Roundup, but this week we're going to be taking a little different approach because it's a holiday week and we're going to look at the year that has been so far. But first, a word from the Nebraska Soybean Board.
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Welcome back to the Weekly Market Roundup. We're taking a look at not just the week that was, but the year so far. 6 months into the year, it is now July. Believe it or not, the year is about half over, and we're going to be taking a big picture look at things. Kyle, let's start with you. What would you say have been kind of the headlines that, as we write the book on the first half of 2025, what are the things that stand out to you about what are we going to remember about the first half of this year here?
Live cattle and feeder cattle, new highs. I mean, bear markets don't make new contract highs. And albeit we've seen a few headlines here recently about this southern border opening up, but it hasn't been officially opened yet. We've been back and forth about this for several months, starting at the end of last year. So we've seen massive gains in both the live and the feeder cattle as far as cash live cattle, new all-time highs in cash cattle, new all-time highs in cash feeder cattle, as well as board and contract highs as well. So cattle are definitely what I've been watching in the first 6 months of the year.
And Heather, what about you? What stands out to you so far about the year 2025?
I definitely think that over the last 6 months, this has probably been one of the most everyday volatile, markets, but in general, the most blasé 6-month look at a corn or soybean market from a standpoint of nothing huge has happened. All these little things keep adding up and we go nowhere. The momentum is to the downside when we do trade. We'll get little blurbs here and there, but a lot of that has been outside noise, so not ag specifically related, I think. Outside noise driving what's going on. It all ties back into ag, but it's nothing super specific to one talking point from a corn and soybean standpoint. Obviously, you've got all of your headline news, tariff discussion, different war conflicts in the Middle East and Russia-Ukraine still going on. You do have some acreage discussion coming into the conversation here as of late, like really, honestly, a pretty mild June 30th acreage report compared to what we've normally seen over the years. So in general, there's not just like one big, huge thing. There are all these little things kind of adding up. I do think probably the most interesting fact that I think the farmer is definitely waiting for us to perform on is the fact that we've not retraced our February price average for corn yet. And it's been years since that has happened where we haven't had that retracement happen in that springtime timeframe. So I think that's one of the big things kind of hanging out in the back burner. People are waiting for this opportunity to come back around. And I think as much as Kyle mentions cattle highs, we're setting new lows in corn, and you can never stay one direction for too long. So I think the big question is like, when does the other shoe drop? That's kind of what we're waiting for.
Kyle, she mentions not just one headline. There's not been one big story, but it seems like these little daily things that cause volatility. Are you seeing that in the corn, or not on the corn side, but the cattle side as well? Have you seen that, or would you say it's been a little different that way?
Yeah, I'd say it's probably been about the same. However, a lot of folks are looking at these big pullbacks thinking the top is in, and we've seen chart reversals, we've seen weekly reversals, we've seen daily reversals. But from a monthly standpoint, that chart is still pointed upwards, and it looks strong from a long-term investment standpoint. And a lot of folks are saying, well, these funds are just going to bail out at some point in time. And they will, don't get me wrong. But right now, the market's in their favor in the cattle complex because the spreads have been friendly the first half of the year. They were friendly the last half of last year. They've been friendly the first half of this year. And so far, we've seen some liquidation, but not a massive liquidation of these non-commercial funds to get out of their entrenched position. So they are still entrenched in this cattle market. Unlike the grain complex, short covering rallies in the grains maybe, but over there, the spreads are telling the story, and they've been telling the story for months over there, just like they've been telling the story for months in the cattle. Cattle seem to be friendly, and it looks to me, even on some of these daily and weekly headlines, whether it's a plant shutdown due to a strike or if we've got a screwworm headline here or there that comes out, it seems like this cattle market has not been fazed by it longer term.
Heather, let's take a step back and think, if I'm talking to somebody in town, maybe who doesn't follow this day to day, and they're just saying, hey, Heather, what are the markets doing these days? How would you kind of describe the situation on the grain complex these days? What have been the major factors that have been making a difference so far this year, would you say?
I think the easiest one for just like anyone in general to relate to is this tariff tension is kind of how I think of it. We have a lot of unknowns. And so when you don't know what an actual agreement could be or could look like, what do? You do a whole lot of nothing because you don't know. And so when I talk about that with people, on the street, in the grocery store or whatever, it's like if you had something you were producing and you have no idea what your sellers' agreements can look like, what your international relationships will look like, you can do a whole lot of nothing with that product, unfortunately. And so it creates a lot of unwillingness to change the status quo. And it creates a whole lot of unwillingness to go too far in the future making decisions. And so that's the problem I think we're really running into when we start looking at how does it affect the farmer the most is approaching harvest and looking to our buyers on, what are they thinking? Is our train schedule going to be super robust? Do we have a lot of exports that we can put on the books? Like, do they have commitments on? There's a whole lot of, I'm not sure. I don't know. And so when that becomes a situation, it makes it harder for any of our buyers and users to make those 3 months, 6 months, 9 month down the road plans. And unfortunately, that means we're living very hand to mouth, which we should be accustomed to by now. Several years ago, COVID and inflationary measures sent us very hand to mouth on our end user and buyer side of the equation. And it just really has not gone away. And this year is not helping us try to make those forward, decisions with our buyers. Now, from the farmer side of the conversation, if I'm having conversations with farmers directly, we can't control what the funds are going to look at and react to, what the market's going to look at and react to, but we can control the risk back to our operation. And so a little bit of a different conversation with them is as much as, the market hasn't wanted to do much, hasn't given us the opportunities that we want. We have to figure out how to protect and make opportunities out of something. And so we have had those conversations around what can we control? How can we control it? And that's, putting in downside protection and making sure we set ourselves up to get those 3, 6, 9 months down the road with this crop.
And Kyle, I'm going to reverse the question we were talking about. If somebody's not following the grains, if somebody's not paying attention, what's been going on in the livestock? They're a row crop guy. They're at the ball game. They're at church at the county fair, and they run into a guy running some cows, and they're like, boy, I just keep hearing about record cattle prices. What's the story there? How do you describe that? How would you explain kind of the scenario that we find ourselves in as of July of 2025?
That's a very good question. Now, most of the questions I get at ball games, in fact, I've got this question last night from a row crop farmer. He's like, I've got a local feed yard that just wants to buy my corn. What should I do? Well, the feed yard's probably doing the right thing, trying to source grain while it's cheap, because they're looking at it hand to mouth, as Heather said. But longer term here, looking at this cattle complex, they're saying, okay, the price of meat in town is astronomically high. How can these people afford it? I mean, well, we're still eating it, but how does everybody afford it? Well, that's something here that a lot of folks are taking into consideration here is what the price of boxed beef is. Now, that is very scary. The levels that we've gotten boxed beef to, we've made all-time highs in the boxed beef market here, and there's no signs of it slowing down just yet. So what I'm looking at here, as far as if I were to tell someone that isn't associated with the cattle complex and wanting to invest in it, be very careful up here at these lofty levels. Things could turn very, very fast. Now, we are hearing anecdotal reports out there about how we have less cows than we did back in the 50s and 60s and 70s. And I get all that, but we are also making a lot bigger carcass. So what used to be a 900-pound live animal is now a 950-pound carcass. So we're basically 2 for 1 to what we used to be. So I can't get too wrapped up in this low numbers when we still got record production out there.
Yeah, Kyle, I was actually just going to ask you that exact thing that I think is lost on a lot of consumers. They just hear these headlines that the cattle herd is the lowest level it's been in 70 years, but the amount of beef we're getting off the individual animal has grown astronomically. But do you still see the potential? Are we going to start turning things around in terms of the size of the herd? At what point does that start happening, or maybe are we already seeing some signs of that?
That's a very good question, and I do think we're seeing some small signs of it, but interest is going to have to go down a lot more than where it is right now for these folks to retain heifers. And when you look at the price of feeder calves out there right now versus what the cost of interest is, you know what? Let's get rid of it. Let's stop some interest at the bank, or let's put some money in the bank and let it draw some interest for us instead of paying interest. So that's something here that you're going to have to see changes. The cost of money is going to have to change here a little bit in order for there to be a lot more massive heifer retention out there. And we've seen some rain. We've gotten some rain here. The drought monitor has shrunk quite a bit here through the Central Plains and Southern Plains as well. So that's adding back a few to the herd, I believe, but not the massive amount of retention is taking place just yet based on a monetary standpoint.
And Heather, maybe let's talk to you about profitability on the grain side. What are the opportunities for a producer to be profitable? Because certainly we're seeing prices that remain depressed. Inputs, there's still a significant cost. What is the outlook just for some profitability in the row crop sector?
Well, I think if you're looking at market prices today, that's a massive squeeze and probably a negative calculation for both the corn and the soybean side of the equation. Earlier in the year, we had some opportunities to price some things, put some daily averaging products on. Early sales and early averaging that was done is probably sitting pretty good. I would say we're above break even for the most part on any early averages and early sales. And then since about the end of April, things have been pretty tough. And then the last couple of weeks here, especially sending us lower on corn. I think in general, we started the year on soybeans and if you could have sold something high, that's still not at break even for soybean side of the equation. Soybeans have really just been discounted in the farmer's mind as this is a losing crop. It's going to be tough. And there's a lot of value from a fertility standpoint in having these soybeans. And so we're kind of relying on that as being the reason why we have them, unfortunately. On the corn side of things, as much as you have a really great crop insurance coverage level, I always like to caution people into relying too much on that, because at the end of the day, it's a revenue calculation that something's got to lose to calculate a payment. And generally that means production has to have big enough issues. Now the market could technically drop enough to induce that payment, but I highly doubt that we're going to, raise a fantastic crop and have a market drop big enough. Just from a percentage standpoint, that's a massive drop. So, I like to caution people that we have to be proactive ourselves. We can't just rely on insurance in that standpoint. I do think that when you look at the profitability margin overall, it's going to be slim. It's not like we haven't been here before. However, the amount of dollars outlaid, the amount of interest getting calculated on those dollars is a really big deal. And I think Kyle brings up a great point for cattle and the cost of money over there. It's the same thing over in the row crop side of the equation. And that cost of money is what I think is going to affect our margin the quickest right now. And when you look at the ag sector having issues with profitability in rural America, that's a really big deal. When you start looking at investment back into communities and businesses and infrastructure and things like that. So this tightening of margin, this pressure on the row crop side of the equation, we're going to feel it everywhere. It may take about 6 to 9 months for everyone else to kind of realize what that stress looks like. But we're going to feel it everywhere for sure, not just on the farm, but kind of everywhere in rural America, I think.
And Kyle, throwing the profitability question to you. What profitability, as you explain that in the cattle sector, what are you seeing in terms of profitability that way?
So far, there's been good profitability here recently. These guys, I personally feel in order for these feeder cattle to come down, you're going to have to take a loss on fats, because right now we're still making good money on fats for the foreseeable future. Even with the board at a little bit of a discount out there with what these guys got in feeders, they've been very fortunate that this market has gone up since they laid those feeders in here several months ago. And in order for this market to really, for a producer really to get bit short term, they're going to have to take a loss on fats, and that's what's going to hit the feeder cattle. I think the hardest is when that happens. But right now, I don't see that. I am getting a lot of question, though, about how these fall calves are going to be coming into market here off these video sales, and how the ballers are going to be rolling in here in September, October, and early November, and how that's going to look out against that next summer board. So I know a lot of folks are looking out there, and some folks are looking to get some feed costs locked in as far as that goes. So, try to protect what you can, or try to control what you can control before you have to make those big decisions.
We need to wrap things up here, but as we look at year to date, where things have gone, let's talk about risks and opportunities for the remainder of the year. Heather, harvest will be here before we know it. What risks and opportunities do we project on the grain side of things as we start thinking about closing out the year?
Well, I do think that everyone thinks a massive corn yield is a risk to prices. What I will also say about a massive corn yield, and I mean, if it really truly is as big as everyone wants to speculate right now, that these low prices continue to breed demand and usage. And so that is always helpful. At some point, we will find the sweet spot and be able to support this market with those demand numbers. Demand is super strong on corn. We haven't really traded much of that. So I do think the corn crop is sort of its own worst enemy right now, where it's big, but it could support demand going forward. There's just a lot of unknowns out there around the trade deals as well. I actually think a trade deal, a couple of different countries that are in discussions, is more supportive to corn. 45Z is in the big, beautiful bill right now, and that is extremely supportive to biodiesel, which is then soy oil and soybeans. So that is on the horizon at some point here. Hopefully that gets done soon, and that's supportive to beans. And what we've noticed is that when beans are having a rally, it will drag corn along with it. So I do think that those kind of two things are like our biggest ticket items. The trade deals, the 45Z, and obviously then weather related to both corn and soybean crop sizes. We're sitting on some extremes, really, really big corn crop and a pretty small bean acreage. So extremes will always give us volatility, and volatility, those kinds of movements is what allows us to make opportunities happen in both the futures, and then going into harvest, we'll look for some basis opportunities as well.
And Kyle, as you look ahead, what do you project in the next 6 months?
That's a good question. The next 6 months is going to probably have a lot to do with the Fed funds forward curve here, how the Fed deals with this interest rates moving forward here. If we get a cut in interest rates, that may signal some more retention here. Also going to be watching the weather. If we keep getting moisture here in the central United States here in the southern plains, that's probably going to lead to a little bit more heifer retention. There's plenty of feed out here right now. So I do think that there's going to be somewhat some decent demand underneath these cattle here, both for feeding and for breeding as well. Try to get this herd built back up. I know a lot of folks are looking to retain some heifers and things like that. But as crazy as it sounds, for all the liquidation we've had here in Nebraska, there's sure not a lot of grass here that's available for younger producers, or you really got to hit it hard if you're looking for it. So I don't know how much liquidation is really taking place here. I think a lot of folks really held on until they absolutely couldn't hold on anymore, but not a lot of grass out there switching hands right now at this time. So that's something I'm going to be looking for as well. And also here on this live cattle side of things here, what happens with the box beef market? We're looking at economic standpoints there as well too, from a macro picture. If this box beef market does break, then the packers likely not going to be paying up, but the first signal that's going to be obviously in the spreads. When the spreads start to crater and cave in, that's when we're going to have to. That's when we're probably going to see something here make more of a longer term shift, or be getting ready to make a longer term shift when we start to see those spreads cave.
Well, very good. Thanks so much to our guests this week, Kyle Bumstead and Heather Ramsey. As a reminder, commodities trading involves substantial risk of loss and is not suitable for all investors. And that is this week's Weekly Market Roundup, brought to you by Nebraska soybean farmers and their checkoff.